In this video, we're going to talk about how to get less money taken out of your paycheck. In this video, we're going to show you how to get less money taken out of your paycheck. Unlock your paycheck's full potential. These are secrets that can help put more money in your pocket. I'm going to show you exactly how to maximize the money you put in your pocket. Remember, our tax system is voluntary, so don't voluntarily pay more money. I'm going to show you how to literally put an extra $15,000 in your pocket. So stay tuned. Now, as you know, thumbs up, thumbs down, thumbs sideways, subscribe. It's a little known fact that if you hit thumbs up, you'll become a millionaire in 2 years. Just kidding. Type in your notes. If you have any questions, go from there. Let's have some fun. Okay, let's talk about taxes, okay? I'm gonna tell you this. How do you put money in your pocket? Let's start off with the most important thing you need to do. The IRS is not against you, okay? And you gotta understand, okay, I don't know if anybody's ever seen that TV show or the Yellowstone, the prequel to that called 1883. It's phenomenal. Where they ended up, here's a spoiler alert, okay? That's where my family, that's where they're from, okay? My dad had 9 brothers and sisters. My mom had 6 brothers, farm, all that stuff, outhouse, all of that stuff. So in my family, the IRS was, if they come knocking, you shoot, then you ask questions later. Okay, and I kind of took that with me. And then I have a phenomenal mentor in my life. He's also a multimillionaire CPA. And he said, Sean, why are you always looking for these loopholes? There is no such thing. The IRS are just the referees of the game. And that was my big click, if you will. Right then is when I learned how to start putting more money in my pocket, okay? In other words, stop looking at them as adversarial. The IRS doesn't make rules. They literally don't make the rules. Congress does. And he goes, if you understand it, Congress makes rules so that business people can win. So if you're sitting there looking at this video and you're thinking, how can I win? Right off the bat, because we've had other videos on mindset, making money with bad credit, all of that good stuff. Here, this fits right in with it. What's the easiest trigger lever that you can get more money in your pocket? And that's what we're talking about in here is understand this boring subject out there called the IRS code. There are some basic things out there that you can utilize. So first off, if you're working for somebody else, we have to get away from that. You just absolutely have to get away from that. So your thing is, I hate this word side hustle because that means it's part-time, it's practice. That means almost like you have a side woman on the side. That doesn't work, okay? My goal is to make that side hustle, that side business, my main source of income on this. And the first thing you need to do is you need to establish yourself as a business right off the bat. If you've got kids, let me give you the easiest thing to do. The first thing you want to do is hire your kids. Okay, let me give you an example. I've got a kid still at home. She does taekwondo, she does singing, choir, all of these things. That cost money. Okay, so how many of you feel that you're going to spend at least $10,000 to $15,000 a year on your kids? Raise your hands. I can't actually see you, but there you go. Okay, so why not do it tax-free? What? Okay, yeah, you can do it tax-free. So in 2024, as of this recording, you can pay your kid up to $13,850 a year. You can deduct that from your taxes. So in other words, you don't have to pay taxes on that. They don't pay any taxes on that. And you can literally set them up a bank account. Now, I'll do some other videos on what banks to use because there are some bank accounts right now that are paying 5 and 5.5% just on savings. But now you can set them up an account and they can start paying their own expenses. Now, don't get me wrong. I'm not going up to my 9-year-old and going, here's your debit card and go pay your own things on that. But I do spend time explaining, are we doing these things and what is going, and then she knows it's coming out of her account. And it's really interesting because even though that she doesn't control that account, she takes personal pride in the things that she thinks she's paid for. Uniforms, all of that stuff. There's just a sense of pride that she goes, as much as this. Her older brother grabbed a pen a pen. We were on vacation and she found this pen that she had to have. I said, I'm not buying it for you. She says, I want to use my own money. And she has a choice to do a certain amount of that money. She bought that pen and her brother borrowed it. And she was so upset at him, she made him like a 2-minute video on why he shouldn't borrow. And it was my money and I earned it and this and that. And I was like, I was holding the camera. I was like, damn, I'm glad I'm not her brother, you know. And said, don't ever touch my pen again. I use my hard-earned money and this is special and you lose things and all this other stuff. That's a big benefit, sidetrack of that, okay? So there's that right there. So you're gonna spend the money anyways, why not do it tax-free? Now you think about this. If I spend just $10,000 on my child in 1 year, in order to make that money under my tax bracket, I'm gonna have to make about $20,000. $20,000 to spend 10. Why not do it tax-free? There's number one. Here's a second one. This is huge, a health savings account. Oh my gosh. Please take advantage of this. This is like free money. This is like the double secret. There's a lot of talk out there on this, and you got to move your shoulders like that when you talk about it because this is huge. This is $5,000 a year you can add to this. Okay, so now here's the key. You can set these up where you can manage that money. Now, I personally have these set up, but I don't use the money for qualified health stuff on that. I still use my own money out of my own pocket because I don't want to touch that because it grows tax-free. Yes. So I can literally use that money to invest. So I can buy stocks, I can buy real estate, so $5,000 a year. Start doing the math. If I was to put $5,000 a year at 7.54%, which I think is the S&P 500 average for the last 54 years, and I was to put that money in there over a 30-year window of time, you're looking at probably close to $500,000, right? Okay, now why don't I use that money to pay my medical bills? Because it's growing tax-free. So try to stay away from that as much as possible. If you do need that, it's there. But those are just two factors right there. So in other words, I reduce, let's keep it simple. I put $10,000 for my kids, and I put $5,000 just for me. Now remember, I get $5,000 per person in my household, okay? But let's just say I did 10 and 5, that's $15,000. I've reduced my liability. There's the name of the game, okay? The IRS says I can pay, it's a voluntary system, so I say, well, I wanna set this up, I wanna set this up. There's all of these little nuances out there. Now, I've saved the best. This is so cool. The vehicles you purchase, okay? I bought my first car in my life in 30 years just last month. You know what it was? It was a vehicle that weighed over 6,000 pounds because anything over 6,000 pounds qualifies as a 179 exclusion, and I can do an accelerated depreciation. I can write that stuff off in the first year. Oh my gosh, the reason I bought trucks for years and years and years, because they all weighed over 200 pounds or whatever the weight is, look it up. It's called 179 exclusion. So all that means is you take what I paid on the vehicle, let's say it's $90,000, believe it or not, that's how much trucks cost. I mean, these things do everything but laundry, right? But for $90,000, instead of writing that off over 5 years, I get to depreciate that in 1 year. So again, my tax liability gets reduced by 90 grand. That means I don't have to pay tax on that. So I put myself down into a lower tax bracket. Literally, when I'm working with somebody one-on-one, the first thing I talk to them about is what we're talking about here. What are you doing that you're leaving money on the table? Why would you pay the IRS more money? They don't need more money, okay? They've got plenty of it out. Please don't donate a bunch of money to all the different causes that we have around the world. We won't go there. But listen, I've got some brand new courses on this right now. This is absolutely put so much money in your pocket right now. And guess what? It's free. All you got to do is click on the link down below, look at my brand new course, and get yourself to financial security for you and your family. This is Saen Higgins saying God bless and good luck.